welcome, welcome, welcome. Can you guys hear me all right? Everything's okay? All right. Well, thank you guys so much for tuning in to today's actually. Surely you guys did pay attention to what was going on yesterday with the election. And during the Asian in London session, we did create a massive move higher. We moved a total about 500 points now on NQ. And we did end up taking out previous week's high and previous month's high here on NQ. So we did not take out the monthly low, and we completely reversed. Which is, I mean, it's understandable because the volatility in the markets just allows it to. But here now I am anticipating I don't necessarily have a bias here coming into this morning as of yet. I do want to see how we close here on this 8-hour and 4-hour candle before I really select a side here. But like I said, we did move up significantly higher here during the Asian in London session. So I don't really, like I said, I don't really do have a bias here. Because we've already completed the higher time frame objectives, we tend to usually, once we complete an objective here on the higher time frame, prices is most likely going to consolidate. But like I said, I do want to see how we close here on the 4-hour and 8-hour candle before I really do say, before I say anything. But as of right now, I would like just to watch what we are going to do here on during price action. We took out previous AI, and we completely disrespected this daily fair value gap here. And most likely, what you can anticipate is we're not going to have some sort of immediate rebalance here on this daily time frame. I'm anticipating some sort of a I'm anticipating that we are going to create a daily fair value gap. But this daily fair value gap that we are most likely going to create is going to be treated as a breakaway gap, meaning we're probably not going to come back and retrace back into it. So, like I said, I do want to pay attention to how we close here on the 8-hour candle and the 4-hour candle, because that will tell me if we have room to continue higher or not. But as of right now, we did complete previous week's high, or I'm sorry, we did complete the weekly objective in the monthly objective. So that's just something that you do want to keep in mind this morning. But yeah. I don't know. Well, let's not bring any politics into this. But yeah, it was an interesting turnout yesterday on the election, but very interesting. Donald J. Trump. Why can I not say that? Donald J. Trump, has won the election yesterday. All right, I do want to, like I said, I do want to just continue to watch and see what prices wants to do. We still have about like 15 minutes left, so I do want to wait on that before anything else. And let's go over some of the pros and cons from previous week. I know I do this every single day that I live stream, but it's just essential to me that I do these little recaps as they kind of freshen my mind and kind of prepare myself for the trading session. So the positives here are sorry, excuse me. So coming into this morning, like I said, I don't necessarily have a higher time frame objective, because we just took it out. We just took out previous week's high and previous month's high. So I'm trying to web this together with one of the positives from previous week, is that if we have completed a higher time frame objective, right, I'm going to switch over from higher time frame objective to lower time frame objective and trade with the intra-session models, meaning that I'm going to probably only target, a rebalance of a hourly fair value gap or retracement back into a 15-minute dealing range or something like that. But I'm not going to be shooting for all-time highs here, right? The model here that I might be presented isn't for us to target all-time highs. Even though the daily, the 4 hour never, the daily time frame, the higher time frame after the 4 hours is suggesting that we could continue higher. The current moment, that very moment right now, it appears that we are most likely going to continue lower, but for that time being. But like I said, this is lower time frame trading here. Notice how the higher time frame is different, completely different. You have to keep in mind that. So you have to understand the objective at hand, the objective at that present moment. Because if you're not in confluence or if you're not in alignment with that current objective, then your model isn't going to be on the right side. Because let's say you're taking a daily model, right? You're shooting for a daily objective, but you're on the 1 minute chart. There's no correlation there. Second positive is basically understanding why we created this bearish 30-minute power of 3, which I'm going to show you guys here. So the trade that I was talking about here is this. So we took out previous day high here, specifically on the day of October 30th, right? Previous day high was the draw of liquidity for me, for the daily objective at least. And once we took out previous day high during the morning open at 9:30, I believe, or 8:30, we retraced back inside the discount of this range. So we have completed 2 higher time frame objectives for me, right? If I'm going to short, I would only short to the discount of this range. And then after we reach the discount of this range, I don't really have a higher time frame objective anymore. But yeah, so I come into this morning with the idea that, okay, I'm probably going to be trading only lower time frame models, right? That's going back to the first positive I went over. And in this specific trade here, at least, after we retrace back into the discount of this dealing range here, the higher time frame dealing range, we rebalanced a hourly fair value gap, a 30-minute fair value gap, and a 15-minute fair value gap. And notice how we create this bearish 30-minute candle, right? We created a bearish 30-minute candle after rebalancing a 30-minute fair value gap. So it makes sense for us to create that bearish candle. So just understanding why we created that power of 30, understanding the reason why we created a bearish or bullish candle in the first place will give you higher conviction and higher confidence, higher probability of the trade panning out. Third thing is that I was able to incorporate higher time frame objectives, right? So why do prices move? To rebalance inefficiencies, to retrace back into discount or premium, and to generate and take liquidity. So with that in mind, I created 3 models here: equilibrium model, expansion model, and rebalance model. All of which is basically us rebalancing a fair value gap, retracing into premium or discount, or taking some sort of higher time frame liquidity, which I'll go over after this. But yeah, some of the negatives, or not negatives, but something I could kind of tweak is being more aggressive and being more consistent with the models that I do take. So improvements here are, like always, being selective with the models that I take, requiring a higher time frame objective, like I said before, equilibrium model, expansion model, or rebalance model. Right? So requiring at least one of those for me to take it. The model, being consistent with the model that I take, being aggressive and being patient and being focused and allowing the trades to come to you or me, I guess. But yeah. That's going to wrap it up for the pros and cons here. And let me actually log into my account. Okay, bye-bye. Make sure this thing doesn't log out on me whenever I'm in a session. Alright, here I am, I'm back. And yes, so based on how we are looking here on the 30-minute and hourly time frame, it appears that we are most likely going to take out this 15-minute, 30-minute, and hourly low. And pay attention to how we close here on this 4-hour candle. If we close below this 4-hour candle's if we close below this 4-hour candle's high, we are most likely going to rebalance this fair value gap. So I want to see us close below this 4-hour candle's high for us to rebalance this 4-hour fair value gap again. So let's just see. I want to see how we close there first, actually. Depending on how we close. So where is that at? Okay, so I want to see us close. Yeah, I want to see us close below there, because that would mean that we're most likely going to rebalance that 4-hour fair value gap on the 4-hour time frame. Is there a PD array that we could enter off of? There's this 5-minute fair value gap. There's a 3-minute fair value gap. So we could take this here. There's this model. So, like I said, I do want to see how we close there first, before anything, to be honest. So let's see here. Will we create a bearish body sore? About a minute left here. Bye, Matt. We are actually expanding a lot lower here on ES relative to NQ. Yeah, there's a large SMT divergence here right now between ES and NQ. Not really large, but there's an SMT divergence for sure. Yeah, I want to see us close below this. If we don't close below this, I'll make this red. Yeah, but if we don't close below this red line, I'm not gonna take anything, because what's the higher time frame objective for me if I take this trade? There's no higher time frame objective. If we close below this red line, the higher time frame objective is to rebalance this 4-hour fair value gap, which makes sense. But if we don't, then I'm not going to take anything. If we don't close below this red line. So let's see here. So we didn't close below that red line. What do? I'm just not going to take anything. So yeah, notice how we didn't close below that red line. We could still continue higher. We can continue. We can continue lower for all I care. But because we didn't close below that red line, I don't have a higher time frame objective. So what do? What am I requiring for me to even enter anything? A higher time frame objective. I don't have one here. I can't see what retracing into equilibrium with this dealing range here. Actually, I could see that being the case, to retrace back inside the dealing range. I'm going to give it a shot. That is the question. This would have been the dealing range here, but we already completed that. Yeah, I don't know. I don't know. Honestly, I can't tell you. Ba-bum, 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 ba-bum. Let's see if I haven't checked out chat in a while. Let's see if oh my gosh. I'll never let you go again like I did. For used to say I would never love to. That's not something that I would have liked to see there. If we're going to continue lower, we should have continued lower already. But yeah. Higher time frame objective wasn't entirely clear to me. Like I said, we weren't rebalancing a fair value gap. We weren't retracing back into discount. Like, look, here we have already traded back into discount, so there's no reason for us to take this. But if we can get a bearish 15-minute closure here or something on NQ, then that means it's going to be a expansion model with the idea that we're going to take out the 30-minute low here and the hourly low. But as of right now, no trade yet so far. All right. Do you have any chatters? Oh. No one in the chat? All good, all good. There's a 10 o'clock open here. Let me mark that out actually. Sorry about that. I'm eating corn corn nuts. Ranch corn nuts. Pretty tasty. Like I said before, this is really long. I gotta stop exaggerating. There's a SMT between NQ and ES right now. Shoot, I just dropped a nut. I just dropped a nut in my room. EQ model. I gotta review that. Alright. 2 more cornballs and I'm done. These things are too addictive. And last one. right? So EQ model, what is an EQ model? Well, I'm sure you guys know about daily ranges. And if you take a, so for example here, if you take this swing high, okay, so if we take this swing low, right, to the highest high that was created here, we have ourselves a mini dealing range. Well, here at least. So it was from a hourly swing low to an hourly swing high. And from that, we get quadrant levels here. The halfway mark of this dealing range would be considered equilibrium. Anything below equilibrium is discount. Anything above equilibrium is premium, right? You always, pull it back just a little bit here. You always want to be a seller in premium, and once we trade back into discount, that's when you want to become a buyer. So in this model here, you're technically shorting to continue higher or longing to continue lower, if that makes sense. So here I would look for some sort of sell model, right, to target the equilibrium or the discount of the dealing range. After we trade back into the discount of this dealing range, I would close positions, take my, take the model that I was given, close it, and then let prices do whatever it wants to do. And if we, continue lower, then we'll continue lower. I mean, who cares? If we respect the discount, then we'll continue higher. But all I know for sure, or all I know that I have conviction in, is that we are most likely going to rebalance and retrace back inside this equilibrium of this dealing range here, which is why I have created an EQ model. And you have to understand that dealing ranges or fractal, right? So this is a 15-minute chart, but I pulled this from an hourly chart. So you can see how fractal prices can be. And even on like the daily time frame, you'll be able to see dealing ranges. So like here, you can see a dealing range from this swing low to this swing high here. So there's that one. And I mean, there's dealing ranges are everywhere. And essentially, you're just targeting, like I said, the premium or discount of the dealing range. So some examples here are, so notice how this hourly candle closes, right? Bearish candle closure. We are already anticipating lower prices with how we close here on this hourly time frame. 4-hour candle as well, suggesting lower prices. So now, in the model I'm taking here, I'm going to take a short base off of this 15-minute power of 3 to target the 15-minute low, target the 30-minute low, and what am I also targeting? The discount of this dealing range, right? So there's a reason for us to continue lower, not just because that the 15-minute suggests that we're going to continue lower, but because the higher time frame here, we created a dealing range, and that in that dealing range, it appears that we are most likely going to retrace back into discount. So that's just one example. Another example is here. From swing low, swing high, targeting the equilibrium of this dealing range. And in this picture here, it's not as clear, but we didn't get a retracement back inside this discount before I took this trade. So I took this trade based off the 15-minute power of 3. The 15-minute time frame, right? The 15-minute candle is already suggesting lower prices. But did we retrace back into discount yet? Not yet. So there's two reasons why we're going to continue lower here. Because of the 15-minute model and because of the higher time frame objective, which is to retrace into discount. And then entry pattern, you guys can find that out through my other videos. Again, swing low, swing high. There's a dealing range. What is the 15-minute, 30-minute, and hourly suggesting? Lower prices. Why are we going to continue lower on the higher time frame? To retrace back into discount. Here's the entry pattern. Bam. Really simple stuff. And that's essentially what an EQ model is. I don't think there's anything else to say here besides that, to be honest. But yeah, that's gonna be the EQ model. Let's see what ES is doing. Okay, so wonky, very wonky. So there's SMT at the London highs here between ES and NQ. NQ has already taken out London highs. ES hasn't. So there's SMT there. Oh, very, very wonky. And ES has already made new on-time highs as well. So keep that in mind. Very, very, very interesting. Let's see what this 8 hour is suggesting here. I forgot to mention, but notice how this 8 hour candle closes here at 10 o'clock. We closed above the previous, this one right here. I'll mark this with a red, actually a red line. So the previous 8 hour candle's high, right? This is the 8 hour candle's high right here. Notice how we closed above the 8 hour candle's high. This suggests that we are most likely going to treat this 4 hour or this 8 hour fair value gap as a breakaway gap, meaning we don't want to see this happening. We want to see something like we open up on this very next 8 hour candle, retrace into some sort of lower time frame PD array, and then take out the 8 hour high. That would make sense if we're bullish, right? Sometimes this doesn't really happen, but if we're really extremely bullish, then we'll take out the 8 hour high, and then maybe rebalance the 8 hour fair value gap after we complete the initial objective. But as of right now, I would treat this 8 hour fair value gap as a breakaway gap just because we closed, like I said, we closed above this 8 hour candle's high here. So it's reasonable for us to take out this swing high right here on NQ. But let's check out what we do on ES. So ES, we didn't close above it. So there's a reason there. I mean, we might not be able to attack this 8 hour high. So just something to anticipate. And also, this 8 hour fair value gap that we created is a fair value gap that on ES could be traded back into or rebalanced. So I'm gonna pay attention to here on NQ actually. If we can get a setup to target this 8 hour high, I'll take it because it is in confluence with the higher time frame. And yeah, let's see if we're given an opportunity. So I'm gonna mark this as ARI. Oops. Do. It's just keep in mind that there is an SMT right now between NQ and ES, so anything is kind of lower probability, to be honest. Alright, we have not much time left here on the creation of a 30-minute candle. Is there going to be some sort of a fair value gap that we can enter off of to target the 15-minute high? We'll see in 2 minutes. How unfortunate. We're probably not gonna get. We are most likely not going to get some sort of entry pattern to target. Talking like a robot. We're most likely not going to get an entry pattern to target this 30-minute high here. Yeah, we didn't get a creation of a fair value gap, and I require displacement to target the 30-minute high. So here, this would be considered an expansion model, right? This 30-minute high slash 15-minute high is something that I'm considering to be taken. But the reason why I'm not taking this is because there is no fair value gaps. There's no reason for me to enter the trade. So my entry pattern isn't present, right? The objective is there. There's no entry pattern, so there's no fair value gap for me to enter off of. Some people could enter off of like an order block, like this down close candle here, or I would say this one, because if you take this sweeps this 1 minute low right here, so this could be considered an entry pattern, but I don't trade off of order blocks. I trade off of fair value gaps, and there's no fair value gaps here in this leg up. There's not a fair value gap, so I wouldn't take this specifically, but yeah. See, so notice how we take out that 15-minute high and 30-minute high, and then we took out the 8-hour high, right? So now that we've completed the 8-hour objective, the 8-hour objective is the 8-hour high, because like I said before, I would treat this 8-hour fair value gap as a breakaway gap because we closed above this high. So now that we've done that, I'm probably just going to close the stream actually. But hopefully you guys kind of understood how I see things here. But thank you guys so much for watching, and until next episode.